Very informed market voice. Jagdish Malkani joins us right now with his sense of how the markets are shaping up and what are individual movers doing in trade. Jagdish, probably on expected lines, but the last few days, last 2 or 3 days have in a way belonged to the rate sensitive. So while the market probably didn't shoot up as much as the bulls would have liked post the 50 bips cut, the rate sensitives have done well. Banking and autos as well in particular, like likes of Tata Motors or Maruti.
Yeah, but you know, PSU banks, one would have ordinarily expected more of a upward reaction with this, reasonably surprising good repo rate cut. And that, frankly, I think partly has been dampened by the fact that A, they had run up a bit, and B, maybe the stock confirmed or otherwise of, again, North Block kind of calling the shots, and that is a bit unnerving. And, coming on the back of Coal India and other issues concerning PSUs in general, clearly has put a bit of a cloud over it. And against that, private banks, some of them roaring ahead, HDFC Bank in the stock market, and once again, another blistering quarter, even notwithstanding little CASA setback. But otherwise, so PSU, private banks clearly doing, at least the first signs are good, and they'll probably be seen to be benefiting more in times to come. Rate sensitives, yeah, you can see auto surely has led from the front. The reality and not so much infrastructure, not so much as I think proof of the pudding will lie. There's still trouble ahead with the results, etc. But the other part to it is that it does look like this is not going to be followed in sharp succession with more rate cuts. I mean, there are a lot of issues to do with the economy, a lot of worries for the RBI. So I think the next rate cut is some ways away.
Okay. Jagdish, I know, and we'll talk about the Chotus in a bit as well, because I know you really like some of these stocks. But let's broadly talk about a couple of large caps and what do you do with them? There is some bit of scaling in terms of new highs that a stock like an HDFC Bank or a Tata Motors in particular has done. You like Tata Motors or a Maruti Suzuki, for that matter, a couple of these stocks at the current levels?
Well, I wouldn't be brave enough to be venturing into buy now, but clearly they look like they're heading. And it's again a Darwinian kind of market we've got there. The strong get stronger, and the weak just mess around, as it were. So if you see, it's true even in mid caps, but new highs. HDFC Bank is at an all-time high, justifiably so, as I was just saying. Tata Motors again. Very good reason. The Jaguar Land Rover IPO on the cards by the looks of it, which will really unlock a lot of money overseas, reduce the debt, etc. And blistering pace in China and other robust markets abroad. Again, it's the cart leading the horses, not domestic operations. And Maruti again with lots of new models, etc., new initiatives, so justifiably. But all I would say is I think these will continue to make newer highs, but I would not be buying. I would wait for dips. And Tata Motors, again, I would probably play it through the DVR.
But what would you suggest people do with the stocks at these levels? Book profits, while you may not want to take fresh buy positions at these levels, would you recommend taking some money off the table?
I would play it with probably technically with trailing sort of stop losses. Ride it out. I think there's more steam in them. In general, I think this rate cut has kind of done a lot of good for the market, in the sense that I don't think, once again, those 5150, 5200 seem strong levels. They've proved very resilient, and yesterday's rate cut would sort of set a bottom. However, let's face it, the markets have become very listless, and volumes have dried up. I think the next big thing is this very clear clarifications on all the tax proposals, GAR, etc. A rival channel of yours was carrying a interview with a major bureaucrat from the Ministry of Finance. Some of that is clarified, but I think there's still a lot of issues. A lot of the FIIs, foreign investors, still very concerned. I think the government needs to come out very clearly, of course, assuming the budget sails through in its present form.
channel checks are revealing, Jagdish, that no fresh orders are coming in from FIIs. So all that money that is being traded is on existing orders rather than fresh money being deployed in the market. That's what dealer desks are telling us. Do you think that is likely to play out for some more time while they await clarification? Nobody wants to take any fresh positions. That's what's keeping the market so tightly range bound.
Well, I won't go so far as nobody. There are deals happening, especially intra-entity, etc. But all I would say is there is concern. You can see the pressure building up. They're even talking about going up to Timothy Geithner's level as far as some associations. After all, it's not only FIs. There's a whole software and IT companies are up in arms. There are issues to do with that. Again, there's a lot of it is to do with the whole retroactive elements of the proposal. The rest, there are not too many issues. So I think clearly it's going to stay dull and listless. And then even in F&O, the options trading, which had reached 50-60% of the overall F&O volumes, have fallen a lot. Cash segment is absolutely comatose, which it shouldn't be. But so lots of issues concerning all that, and the macro picture continues to be pretty poor. So weigh that against the fact that the rate cut is calm and global liquidity is high, etc.
Jagdish, just one quick word before we take a break on what's happening, do you think, with Coal India? Everybody was criticizing this company. They've come out with an announcement about signing the FSAs and the penalty clauses thereof. The market has taken some liking to it. It's finding new footings. How do you like this one?
No, the big news was that penalty aspect that was whittled down to almost zero from, I think it was it was a big number, and that's been very well received, and that sort of in a way is the minority shareholders / the independent directors fighting back, and that's kind of even got the backing of otherwise the unpleasable Children's Investment Fund, etc. So all that, I mean, let's face it, Coal India is a very valuable company. It should be making, humongous amounts of money with this global coal situation, etc. And so in the light of all the other gloomy stuff that preceded it, I think this has been well perceived, and maybe it's a sign that the government is not being totally unrelenting after the tough talk that if you don't like it, you sell and get away and stuff like that. So I think there's and I would tend to agree that maybe there's some more highs ahead for this.
Give us your sense on how you would approach companies with high debt now that the rates have been cut, because there is, of course, that bit of favor that these companies are finding on account of their cost of funds or interest costs going down.
Well, there's some relief, but let's not bring out the buntings. It's still, the companies that have those humongous debts are still huge problems. Infrastructure, construction being clearly one sector. Reality, some of the companies that have gone on a buying spree abroad, many things. So, yes, some relief, but you can see overall there's a lot of stress in the system. Just look at the PSU banks' balance sheets. More importantly, look at the restructured numbers. I mean, those are rising with every quarter, and the CDR committee is an extremely busy committee. It hasn't been so, so alarming for quite a while now, and I don't think, this obviously it's a step in the right direction, but there's a lot of pain in the system. The sectors, airlines, the known one, textiles, metals, there's a lot of pain, and so one needs to be extremely careful when buying stocks, and let alone the whole FCCB story, all the payments that are due this year, next year, with the exchange hits that have taken place. There's a lot of pain.
Jagdish, in terms of aviation specifically, since you mentioned that, would you buy the pain, or would you rather buy into the pain right now, looking at the window that could open up, or you will stay away? SpiceJet or Jet Airways, leave aside a Kingfisher because that's got news of its own.
No, I think they've run up in the expectation of the FDI. I do believe the FDI will come, but then after that comes, the anticlimaxes is that, the airlines are not going to be beating down our doors to get a, it's few and far between, and especially with recent spate of, and let's say the record of FDI and all this business, and then don't forget some of the interested carriers come from the Middle East, and their Etzilat and some of these wounds are still rather fresh. So I'm saying there are a lot of issues, even as far as FDI, when and if it comes. So no, I would wait for a dip. But of course, once again, if there is a reasonable dip in both jet and or SpiceJet, then they become interesting buys.